This is Tom Aspray with the Viper Report Market Wrap video for the week ending December 5th. Well, last week's action in the markets didn't really clarify things for investors or traders heading into this week's FOMC meeting. Of course, those forecasts, 85% I think, expect a rate cut, have not been helped by the lack of firm economic data, which just increases the level of debate. For the week, the NASDAQ 100 was up 1%, while the transports gained 3.6%, by far the market leader. Other market gauges showed a third of a point higher in the S&P and slightly lower in the New York Composite. Utility average got hit hard, not too surprising ahead of the FOMC meeting, while gold also gave up some of its recent gains. Still, the averages closed generally above their 20-day EMAs, led by the Russell up 2.7% above it, and then the NYS Composite was just over 1% above its 20-day. Other averages showed that they have easily some room for a pullback short term, but are not yet extremely overbought. Technical readings this week, pretty much all the AD lines are holding in positive territory on a daily basis, while the Russell 2000 small cap AD line is still below its 21 period weekly moving average, therefore rated as negative. The weekly chart of the SPY shows that we're getting quite a bit closer to that. The weekly chart of the SPY shows we have the tentative yearly pivot levels for next year. So right now the pivot is at 618. That's be the level to watch in terms of a weekly closing basis. Still would suggest that we'll start 2026 off in a positive trend mode. You can see that the new R1 is much higher at 757, while the current R2 is in the 700 area. It's been a pretty good move since the end of the correction in April. When the S&P 500, NASDAQ 100, other AD lines projected new highs for the market, and those were attained a month and a half later. Still a new high here in the S&P 500 AD line last week, a week ago, whereas the NYSE All, is still holding near its highs, has not quite made a new high. Some of you expressed concern over whether we should expect, a growth-led correction like we saw in 2022, or even in 2023. You could see typically what would happen then is that we saw here with this line right in the early September of 23, the AD lines dropped below their moving averages and started in clear downtrends on both the S&P and the New York Composite. Those downtrends did favor a deeper correction, that lasted, in this case, about 6 more weeks. So heading into the FOMC, I'd be surprised. I think if there is not a cut in rates, the market would probably get hit. That does not mean if they do cut rates, the market's going to rally. I think I feel pretty confident that the stock market will be higher 2 or 3 weeks out. The week ahead after action on rates is a little iffier. The weekly analysis on the QQQ still looks quite positive. You see a 1% gain here, moving back above the yearly R2 for 2025, which was at 626.20. Below that we have the AD line. Once again, it's making another new high here. So no signs of a top there. And the RS2 has moved a bit further above its weekly EMA, so it does suggest that the Qs will be a market leader. you look at the daily chart, a little bit of a mixed bag. The close last week or on Friday was a little bit lower than I'd like to see. In other words, you can see sort of a tail here. We had a high of 628.92, a low of 623, and closed at 625.50. So, but the daily technicals, bullish pattern on the AD line, showing a series of zigzags. It's right close to the high we saw in October, and the daily RS also favors the Qs over SPY. In terms of growth over value, sort of a mixed bag here. You can see the ratio was a bit higher last week, moved back above its 20-period EMA. So, however, the momentum is based on the weekly MACD and MACD histogram does point lower. And as we'll talk about shortly, we saw some interesting changes in the behavior of the value versus the growth stocks. In last week's AAII sentiment, the bulls took a nice push higher, and you can see the bull-bear ratio closed at plus 13. That's a breakout level from above the June highs, and does suggest this can move even higher going into early 2026, but still not extreme. At 13.5, that just suggests there's 13.5% more bulls in the survey than there were bears. Of course, the market's still in the up mode after the comments at November 21st regarding the rate cut. You can see we had a pretty nice bottom here, made a marginal low on Friday, and then pretty much straight up. We're right back up into the early November high and a level of resistance. We're tracking the VIX and the VXN pretty closely. That point in time, we saw it has dropped back below its moving average. That suggested that this was not the start of a major new uptrend in the VIX or the VXN, which would have been a negative for stocks overall. Instead, we dropped below the moving averages and are still in clear downtrends. That doesn't mean we won't see, a more negative signal from the VIX or the VXN as we enter in 2026. But does suggest that monitoring of it relative to its EMA can be quite useful. We'd also been watching the NASDAQ composite high-low analysis. You can see clearly a divergence, 233 new lows on Friday as opposed to 500 in early October. But we didn't really see a sign of heavy selling based on the number of new lows. You can see we got up to about 500, and then as the market reversed, it's been dropping now at 67. So one of the half full, half empty ons, this could be the start of a wave of heavier selling here, but if so, we'd like to see a move above plus 500 new lows as to kick it off. For the NYSE composite, pretty similar pattern. You can see it's we peaked in September, just 134 new highs last week. I think we had 240 or so in early September. Same sort of thing, quiet action so far in the number of stocks making new lows. You see a move much above 200. That would be a sign that you should be looking, or it would raise the potential of a deeper correction. We're overdue for that, as I've been mentioning for a number of months, based on the low cash levels, based on the FMS survey of hedge funds, 3.7% cash. That's always a cautionary level. I'd feel a lot more bullish if that level were up to, above 6 as it was near the October 2023 lows. Some very interesting changes in the weekly. Looking at the watch list this week is quite interesting. We generated some sell signals a few weeks ago, but those were reversed this week, including some value indices like the KBE, as well as the small caps, the PSCE, SMH also, TBT closed below its pivot, but is positive based on the DTS signal, as is TQQQ, VCR, industrials, communication services. We've had some buy orders in for a few of these and not yet triggered. Industrials, XLI, even the XLY, which has been lagging, has also turned positive, as has XME. So if you look back down at the breakdown here, you can see that 75% are above their quarterly pivots. That's a good sign. But interesting divergence here now that growth only has 50% above their quarterly pivot, whereas below this the value has 90%. And you can also see quite a bit of difference if you look in the weekly positive signals. I mentioned KBE, XLC, and XLI. Up above we only have XLY, the consumer discretionary, is the only new weekly signal. So looking at the inverse ETFs, they still favor being long the market. You can see all red here on the short ETFs, and down below here on the long ETFs we can see the new weekly positive signal for TQQQ. Everything else is green, 100% bullish. In the sector report, also some interesting changes. You can see the RS analysis on energy has turned back to positive. So the hopes of a bottom are still there. You can see a move above the resistance connecting these two peaks would be more significant. Still, the futures action in the crude oil does not look that strong. And of course, with all the global conflicts, etc., with Russia as well as China and now Venezuela too, it's a choppy market. We can see down here in the energy group, COP and EOG, new weekly buy signals. Interesting, we did see Oxy gave a 4-hour sell, and so not a lot. Valero, it's pretty much all green. We look at the materials. Chart here on the materials is not impressive. Sure, you see a strong move up. We could get a new buy signal, but right now it's sort of a mixed bag. 66.7% above or 66.7 are positive based on the 3-day, and not a lot of new signals as of Friday's close. Similar for the industrial headings, 58.3. Deere had a 4-hour sell, so there's nothing new emerging in that group. Down below in the consumer discretionary, Home Depot and McDonald's both came to life a little bit at the end of the week. Consumer staples still acting weak, 16.7 positive based on the 3 days. So some of the pretty much all red here at this point. Healthcare, it's had a nice little pullback based on the RS. It still just seems to be a pullback. That's in agreement with the technicals I see on the weekly charts of XLV as well as the Vanguard equivalent. And Amgen gave a bunch of daily DTS. So if this is going to be a deeper decline, then we'd be concerned if we saw a few more 3-day negative signals in the week ahead. Financials holding pretty firm, 66.7. Also not a lot of new changes there. In this particular chart, though, as I mentioned before, the KBE did turn positive. If we get into the technology, Adobe, 3-day and a weekly, as with CRM. So Microsoft has been really getting everybody's attention. It's so depressed. So, is this 4-hour positive signal on Friday start of something more? I'll be watching to see if we do get a daily DTS there. Back in the communications holding, you think with Netflix's Warner Brother interest would be a little more interesting. Charter gave a daily, but still, 45.5, so slightly below our benchmark of 50 there, and utilities really have gotten whacked. Technically, the weekly chart's getting down to some important support. So, if we get another weekly close, a lower weekly close this week, we could generate some more sell signals. For now, we'll give it the benefit of the doubt. It's been a good market for us in the past couple of years. Real estate still looks weak, 25% above with daily, and you can see lots of negative there. Jerry and his team have been working on the themes report. If you get that, start watching a little more closely. We have some interesting, the robotics group here, 77.8. Path just gave a weekly DTS. Some of these names are not as well known to me or probably to you. So this AI mix. We have some of the semis, some other stocks in there, but 44.4% daily. But you can see a lot of mostly our daily DTS. So if we start to see some positive action in some of these other ones on a 3-day basis, that would be a good sign. Quantum computing still low, but some names on here that maybe we should start following. Nuclear gauge, same sort of story. Not a lot of familiar names, but we'll start exploring them more as we get into 26, assuming my knee recovery goes as well as it has been. So crypto, same sort of thing. It's been a really tough. Don't see any quite bottom yet in Bitcoin yet. Certainly, if we were to get down into that 75,000 area support, it could cause some pain for a lot of heavy holders who bought probably at 120. Well, that's all I have for today. Hopefully I'll be back to a regular video schedule in the weeks ahead. Questions, commentary, as always, you can send them to tom@viperreport.com. Thank you.